Yeah, thanks everyone. We're excited about this. If you're here in the room or if you're watching on YouTube, the future of Treasury payments, the future of payments is an extremely important topic. Payments power commerce. They make life work much easier. Trading pelts is terrible. Being able to make commerce happen digitally is awesome. There's a massive amount of change in payments. There's new payment rails, new payment types, greater threats on payment security. We have a great panel here. There's a lot to discuss, and we're happy to put them on the hot seat. But before we begin the discussion, we'll begin with short introductions. So if each person could introduce themselves, their name, company, what they do with payments.
My name's Ankush Gupta. I work for Mastercard. I lead the North America commercial product platforms and acceptance business. Been with Mastercard 5+ years, came from the travel industry. Really excited to be here. Just really excited to partner with you, Craig, and team. We've co-sponsored research together on virtual card acceptance and that business and how it's transformed and what folks are seeing post-pandemic. So just really excited to be here as a follow-up to that. So thank you, Craig, for having us. Pass it on.
Thank you very much, and good morning. My name is Bob Stark. I'm Global Head of Market Strategy for Kyriba. We're an enterprise liquidity management solution focused on treasury, connectivity, payments, risk management, and working capital. So many things that are very important at this AFP conference.
Hi, everybody. My name is Mark O'Toole. I work with Fides. I head up their sales and partnerships here in the Americas. Fides is one of the largest multi-bank connectors or connectivity platforms in the world. Essentially, we act as the rails between your bank or many banks and accounts into whatever platform you want to send it to. So we're very happy to be here, Craig. Thank you. The last time I had to manage to do a Fintech Hotseat, it was pre-COVID, so it's great to be back with you guys again.
And good morning, everyone. I am Michelle St. Rose. I work for Corpay. We provide a payment solution for many companies here in the United States. I serve as a solutions consultant, helping companies go from the manual process over to automation.
Great, thanks. Well, let's get started. We have a number of question areas that we're going to go through and discuss. We even have a couple of speed rounds, so you'll hear what we do with the speed rounds when we get to them. So it puts them on the spot. They've got to answer quickly. So let's begin with newer technology. APIs and embedded payments, are they just hype? Is it hyperbole with what everybody's saying about that? What about new payment types and embedded payments? Putting payments into different systems where you're doing business. I'm going to begin, I'll just mix it up. I'll start with you, Bob, this time. We're going to go down to the end and then back to Ankush as we wrap the panel. But API, what's happening with API adoption? Is this vaporware? Is this progress in the right direction? Is this going to take over the space fully at some point? So we're talking about APIs. You can talk a little bit about information reporting if you want, but it's really focused on payments. And if I ask you guys any questions you don't want to answer, just say pass. That's perfectly fine. So Bob, let's go.
All right. Well, I won't say pass. No, I think APIs they're a fantastic innovation, and they will do a lot of things beyond payments, but specifically for payments, it's the ability to have instant or real-time payments between systems and from systems to bank, and obviously all the different uses from there. I see the proliferation of APIs as probably the biggest conduit in Treasury and finance. It is the necessity to make everything else work in real time and instantly. Without them, none of that happens. So APIs, big thumbs up for me in terms of the next. And it's not years away. I mean, it's now, and 12 months from now, it's not even probably that big a conversation because it'll be much more advanced than we are today.
I would bifurcate or differentiate between where the ubiquitous of APIs in the B2C sense is pervasive, and that's great. We're a bit behind the curve, I think, when it comes to innovation around APIs. And when we talk about connectivity, for example, we would have I think the demand exceeds supply in the sense that there's a lot of talk around APIs, and a lot of people want to engage with APIs in terms of bank balance reporting or the payment side inside a corporate treasury, for example. And I think the challenge there is that not every bank has an API just yet. So, which is in some respects good for firms like us, because we sort of can expand out our payment options and our bank connectivity options, and we're not solely reliant on the gap for that. But to round it out, I think the APIs for sure is just going to start to move downhill into that part of the organization and provide a lot of options there. I guess it's a question of timing and standards and all sorts of things. So I think we have a bit of a ways to go, but it's going that way for sure.
Yeah, I agree. APIs are going to be adopted full force in about 2 years. To me, it's a testament to see how long it really takes new process to really evolve and gain the confidence of users. So it's really going to take off. 2-3 years, I think it's going to build the confidence. It's going to make our providers more profitable and our users more confident.
All right, Ankush, do we have any disagreement here or coverage?
No, I think it'll likely follow to what Michelle, Bob, and Mark are saying. But I think the general theme is that it's progress in the right direction, but a lot more work to be done. And I think there's a couple of factors around that. I mean, that we see at Mastercard, but broadly in the industry. So the standards are still being developed for APIs, making them externally available, making them easy for developers to access. Culture shifts are happening or need to continue to happen towards hiring engineers, hiring product and engineering talent that's able to speak the language of APIs. And then, of course, the support around it needs to be more fully developed, right? So we all agree this is moving in the right direction, and it's moving towards being API. Many banks and payment firms are moving to API first. But following that culture shift to make sure that we are hiring the right folks, we've got the right support around it with our product delivery people, implementation people is critical for that. Because you often see studies show that banks feel like they're at 50 to 60% maturity when it comes to API development. And we need that to be a much greater number in a much sooner time frame. And so we expect to see that proliferate, but more to be done.
Yeah, so we've heard over time, 2 years, 1 year. When we think about APIs, I guess one thing on the Europe versus North America front, we look at, we have checks in America. Sorry for those international, we still like our paper. We image it, we send it around really quickly. And it's embarrassing. You go to conferences, you're like, why do you guys still have paper? On the API front, Europe is ahead of North America, whether it's due to PSD2 or otherwise. I guess the question is, when we think about widespread adoption with APIs for payments on banks, I don't know, is there 50,000 banks in the world that are above a certain size? How many of them have APIs now? I mean, the $1 trillion banks do. Some of the next level. How many? When will it get down to its 80% of banks have APIs? When will that be universal adoption? Who can calibrate that for us?
We've seen, at least at Mastercard, research that shows that 80% of international banks feel like we're moving in that direction in the next 2 to 3 years, but it drops significantly to 10-15% when you think of community banks and credit banks and such. So I think there's a lot to be done, but the big banks globally are leading the way, and we're seeing the rest follow. It's a question of timing. It's a question of resourcing. It's a question of building that culture change internally to say, yes, API first, embedded payments is the future, and calibrating the companies around it. The other thing I think that we see an accelerant for is the use cases for embedded payments and APIs, right? So we all know, in our firm as well, that use cases drive adoption and drive priority internally from a resource standpoint. And we see for embedded payments, areas like buy now, pay later, and B2B marketplaces, and food delivery, and gig economy. All these things that are very prevalent in our society now are pushing the banks to focus on these use cases to drive embedded payments and to make API first sort of the cultural norm at their companies.
Great, thanks. Who else? Anybody else?
Well, I found it interesting, the 50,000. I'll actually temper that down in terms of from a B2B standpoint. In our experience, we connect with 1,000 different banks on behalf of all of our customers. Of those 1,000 banks, we're seeing south of 10% in terms of having some significant API adoption. I know adoption can be it's subjective. But in terms of development programs, we're seeing less than 100 that have a project, and much less than that actually are live. And available to use like for customers in a B2B sense. And I mean, from a payment standpoint, that's supporting instant payments or real time here in the States, looking at balance reporting and other things we won't talk about in this session, but just having those use cases as we spoke about. And it'll evolve. Like I like the answer around 2 years. I think 1 to 2 years from now, we'll see measurable progress because the point, I mean, you made this point a second ago, the demand. The demand is there. The interest in use cases. I mean, we're recording this at the AFP conference at a session yesterday on, do I need RTP? Guess what the answer was? Yes. Now, they didn't necessarily know exactly why they needed it. So I think there's some evolution in terms of what that demand looks like. But definitely the interest is there. And it's just a matter of having the supply, having those roadmaps evolve a little bit further. Having APIs support maybe more than just real-time payments, but actually supporting the entire payment landscape so that an organization from their ERP or treasury system can send a file, have that split out into all of the different payment rails that they're looking to utilize. So there's evolution. It's not just instant payments, which I think a lot of people equate APIs with. It's the opportunity to change your entire payment process.
I agree. I think the masses are waiting for API to explode. But again, they're waiting for the confidence in the style of how it's happening, right? You mentioned the timing and the confidence of all the users and all the banks. The small businesses are going to wait for you guys first, right? This is what my clients and the prospects are saying, that we're going to wait to see what happens to you because they don't want to be the guinea pig. But they are waiting for it. So hurry up.
Yeah, I mean, look, you made the difference between Europe and everywhere else. I mean, it's driven by regulation in Europe, the whole initiative around open banking. But the adoption, I think, has been, people have self-assessed themselves to the bigger banks to sort of lead with those API initiatives. But I mean, a hint for any bank is if they don't have a digital officer or chief digital officer or some position inside that organization, gives you a hint as to where's the directional view of the bank and how are they leading on that. But I certainly think, broadly, I think we can all agree that, if the banks don't get on board with an API initiative or some sort of initiative, they're going to be displaced because there's this whole movement around embedded finance and it's not just the banks anymore. So to stay in the game, I think you got to lead forward and create those sort of APIs and whatnot.
Are fintechs ahead of banks on this front, generally? I mean,
yeah, I believe they are. I mean, I think it's no secret that if you think of, banking infrastructure and the IT within the banks over the last 20, 30 years, there hasn't been a lot of innovation there. And I think that started to change in around, I think, 2017, talk of APIs and blockchain and just all these new initiatives that were impacting what the banks do. And it got that conversation started where within the banks, they said, we need to upgrade. So you're seeing, a lot more banks reaching out and teaming up with fintechs. I think all of us here are involved with some banks or many banks. So they're, how do I get there and how do I get there fast and how do I stay relevant within that? And so teaming up with and partnering with fintechs is one way to do it. But also within the banks, I mean, if you take JP Morgan, for example, the people that lead all those digital efforts are all ex-startup guys in hot fintech firms. And so the culture and the mind shift within how they view technology and stay relevant within the ecosystem, I think is growing.
Yeah, the other thing I would add to that, I think the culture shift is super important. I think and that's how we started. I think one of the things that we're very focused on is end-to-end connectivity between the accounts payable and the accounts receivable side when we think about our commercial payments business. And a lot of that happens via fintechs and APIs, right? So a number of our bank partners leverage a lot of our solutions, a lot of our products. But if they want a more automated solution for accounts payable or leveraging our platform, they're going to a fintech that's API first. And so a lot of the ways that we bring the industry from a more manual processes, both on the AP and the AR side, is through partnering with fintechs to make that end-to-end payment experience much smoother and much more automated. And it's driven by API first, and it's largely driven by fintechs partnering with us and with their bank partners.
So going off script just a little bit, we've heard what each of you have said about the adoption of APIs and the pickup by banks. We've also listened. We know how important payments are, but it sounds like when we move to embedded payments, we're trying to disappear the actual payment experience. We want it to like fade into the background, just like rideshare. It's like you get out of the cab. There's no fumbling with money. You want it to disappear. We're doing more payments. It's more important. We need more information and more speed. Are we trying to disappear them? Like better payments means invisible payments. Is that what we're shooting for?
I think we're providing that frictionless experience. In the same way, everybody has a smartphone today. It's intuitive, it's user friendly. You swipe around, everything's sort of one click. So you're making that end experience just frictionless in a way. And I think the sauce and the stuff that happens behind the scenes continues, and how that happens will be sort of a simpler process. But I think this one click, ease of use, frictionless experience is what's driving that. And I think that's just going to increase everywhere.
Yeah, I like the word. I wouldn't say disappear. I mean, I get the direction you're going with that. I would use simplification, which is similar to what Mark's saying. If you think of just the basic process of having a request for payment built into an email or other sorts of digital message, text as an example, then all you're doing is just making it easier for them to pay you. And to me, that's always been the driver for real-time payments. It's not like no treasurer in this conference says, I'd really like to pay more quickly. They're drawn to do that. And a lot of times it's going to be from the receivable side. So do I want to get paid more quickly? Yes, I do. I mean, everyone wants to accelerate DSO. If you're in a B2C environment, maybe it's to instigate late payers and just kind of make them pay a little quicker, make it simpler and easier for that action to happen. So I think a lot drives from the receivables and the simplification of how can I get my money paid to me more easily. And I'll go back to that word simplification. Whatever makes it easier for that payment to happen is going to generally equate with a quicker payment and an accelerated receivable, which is what, going back to cash and treasury, we want that cash life cycle to go faster. That velocity of money, we need that in treasury to be quicker.
I do think embedded payments is going to be a good step, but it won't be making payments invisible. It will help in certain verticals of finance, like legal and CLMs, and embedded payments will make that process happen that much quicker. The simplicity around it and the visibility that it will give the payees is going to be great, but 3 to 5 years after API.
All right, so embedding that. And then one final item on this. Bob, you talked about some of the numbers. I was thinking of the Pareto principle. Everybody thinks of 20% does 80% of the volume. That is not the case in banks. If you got the top 20 banks in the world, that's going to be a significant percentage. What number of banks need to be API capable for you to consider it to be, adopted, well adopted on the way? It's going to take a long time for all banks to move to APIs. Can I pin you down to a number? And I'd love to hear what people think. So when we look at this recording in 2 years, where were we? Where did we hit? And how accurate were you guys?
The way that the industry is structured, and I'll just look at global institutions, there's a number of large institutions. Like I threw a number of 1,000 banks. Across our 2,500 customers, we connect to 1,000 banks on their behalf. So it's fairly centralized given the universe of banking institutions. Of that, a certain element are really big. And then there's ones that are relatively smaller. I think that 20%, to use your example, that once you hit that 200 mark, where you actually see use cases like live, not just we're thinking about an API project or we'd like you to test this because we have an idea that we think might be interesting or we want to follow what your peers are doing. You hit that 20% of those large corporate banks and the rest will follow. I think that is the tipping point here.
Excellent. Anybody else have anything? So he said 200 banks, which is probably going to be at least 80% of payments. Anybody else?
Yeah, I mean, from Fides' perspective, I mean, we're connected to over 13,500 banks, and certainly we're not hearing enough noise around everybody getting on board with an API outside of the bigger banks and some of the regional ones here specifically. But, I think I'll go with Bob on that. The ear to the ground on adoption, greater adoption.
All right. Thanks everyone on the panel. But this moves us to our first speed round. So here's the rules for the speed round. You have to give the answer first. You have to make a decision. You can't say there's two schools of thought to this and I subscribe to both of them. You have to pick one. You can give an explanation and explain why you picked one over the other, but you have to start with the answer. If I ask you something you don't want to answer, you just say pass, and that's fine. So we're going to go through this. So quick answers and quick explanations following those answers. So we'll begin with payment growth. We'll begin with Bob and move down in the same order down to Michelle and then back to Ankush. So first one is payment growth. Payments are growing very rapidly. Do you see payments growing over the next 5 years at 2 times the general growth rate? Yeah, more or less?
Well, I was going to say 2 times sounds like a pretty good number, but I'll just say yes to go just a little bit above that.
Yes.
Yes.
Any other answers? Any other details on that, the two of you?
2 times yes.
No, you gave an explanation. I meant Mark and Michelle. I'll try to be more specific.
Setting aside, the economy and inflation and all those things today, it's just more ways to pay for things in different ways, and this embedded finance and usage will contribute to that, I believe.
Okay, Michelle, anything?
Again, I'm going to stress user adoption. It's just going to keep growing and growing. The better the technology gets, the more use you'll have. So it's definitely going to 2 times to 3 times.
Okay, so we got three yeses. Any divergence from that?
No, I'm going to go with more than 2 times as well. I think the only thing I'll add to the discussion is it'll happen in pockets of B2B payments specifically. So I think virtual card expansion, real-time payments expansion, and stuff are going to be significant growth drivers, especially as we see trends towards digitization of payments post-pandemic. I think that only accelerates payment growth versus the economy. And also the economy is a little depressed and may likely be that way for some time, so that helps.
Sure, great. So the second topic is fraud, and so we'll begin with Mark. And if I get people's names wrong, I apologize. But Mark, we'll start with you. Is the issue about fraud more about technology, or preventing fraud more about technology, or the human element now? Go.
Oddly enough, I think it's still the human element, and that uses technology.
All right, Michelle.
I have to agree. It's the human element. It's getting people to adopt the culture in the new way. I mean, let's be clear. We've been doing things the same way for 40 years. It's going to take a long time to get people to change their ways of thinking in back office.
So I initially had both, and then when you of course said that, then let me say the tech side. I totally get the human element. The technology, as we're sort of coming out of the pandemic and folks are moving more to digital payments, the question becomes, all right, what's the right digital payment that reduces fraud the most? And you look time and time again, check obviously is not digital, but you think of, or it could be, I guess, but ACH, debit, wire, like those are, any survey you see, those are significant sources of fraud relative to virtual card payments, for example, which is next to nothing. And so solving sort of that shift towards payment methods that are reducing fraud is super important. But we do have to focus on the human element, and better training can certainly help that in the AP department.
Yeah, I'm going to go with technology on this one. Not to contradict anything that's been said around the human element, but there's 2 pieces. One is the very nature of the payment and the ability to basically make those payments much more secure through technology. The second one is managing data. Data is critical. I mean, you just think of a simple payment process where I need to consume significant amounts of information around, is this a good payment? Is this a bad payment? Is this a sanctioned payment? Is this not a sanctioned payment? Is the identity of the bank account, the owner of the bank account, actually the beneficiary that I'm paying? These are difficult for people, so yes, human element, but the technology is going to be the solution that overcomes that human element.
Well, I didn't know we had to. I thought it was a quick fire yes answer. So if it's okay, I'll add to that. I don't disagree with that at all. I think that's perfect. But what I meant by the human element is, I had a friend who started a job a couple of months ago as a CFO, and first day in the job was a Friday, leading into a holiday weekend. And you know where the story's going. Gets an email from the CEO, says pay this $50,000. She does. And finds out on the Tuesday when they all go back to work that was not the CEO. And so that human element around, that's an element of payments fraud. But I think, certainly as it relates to some of the debit payments and the embedded finance, there's going to be new ways people are going to find around how to, defraud that part of the business.
Yeah, excellent. So all the people at Strategic Treasury who got text from me about I'm surprising everybody with gift cards and I'll reimburse you by the end of the day, don't go out and buy them. So that's a good example. So we're going to start with Michelle and come down this way. Then we're going to go back and forth for the next one. We're going to go to which matters more, and we're going to pick up the pace on this one. It's speed or information with payments. Is speed more important or information? Go.
Speed.
Speed.
Oh, I'm going to contradict. I'm going with information.
I'm going to go with speed.
So you got 3 speeds and 1 information. Okay, and feel free to jump in on with some more things because we're going to be jumping on information or cost. We'll begin with Ankush and going down towards Michelle. So information or cost?
So I'd say information. From the speed side of it, just to go back to that for a second, I think that's just more difficult to solve. And so I think that's why that's super important. Information has been out there, but the speed element, making payments faster, has been quite challenging to solve. I think from an information versus cost standpoint, information is super important, wanting to make sure that we're reducing the back and forth. And it goes to the human element in a lot of these conversations. Thousands of hours that are spent by AP and AR departments trying to reconcile payments, talking about disputes, and so on and so forth. Reducing all of that is so important. And so making sure that that information is flowing smoothly between the parties is so important. And again, that feeds into cost savings. So one, they're not unrelated, but information sort of takes the bait for me.
Yeah, I will once again say information. And it's for the exact same reason. If you think of procure to pay, order to cash cycles, just the remittance component that travels in the case of instant real-time payments with the payment, so the dollars and the data are actually constantly associated, as opposed to with an ACH, disassociated, and then you have to bring them back together. That information, I'm going to say a hidden gem in terms of benefits of real-time payments. So information is huge.
I'm going to be a little different. I'm going to say cost, and let me explain that. So, I mean, from our perspective, we're into the messaging business. So the information is part of what we would supply and doing those reconciliations and helping them do that. But I think depending on the business that you're in, if you're a treasurer and you're making payments, you're making considerations around cost. Do I do these wire transfers or do I do bulk payments or ACH or same day? There are some considerations there. So depending on that type of business and the volume of the transactions you're going to be doing, you may be making some decisions around how you're going to pay people.
I'm going to stay with information, and I feel it's information because the more information gives you the speed to react, not only to bad scenarios, but also good scenarios. The cost, I really feel, based on speaking with clients and prospects, that it's not going to be an issue. They will pay for what they want and what's going to work. So as long as the cost is maintainable and it could be fit into a budget, they'll find their way around it if we give them what they need.
All right, we'll start back with you again for the final. Which matters more, cost or visibility?
Again, I'm going to say visibility. Visibility is going to be your avenue to everything. If you can see it, you can fix it. The costs associated to having that type of visibility, they will pay. They will spend whatever it takes not to have fraudulent payments cross their path. So I think that if we're giving them technology that's worth the dollars, we're not going to have a problem with it. They are in need of it. No one has any problem spending the money if they have the confidence that it's going to work.
All right, so one, visibility.
Visibility.
Visibility. It goes with my information and data points.
Yeah, visibility. And it goes to the theme that I was talking about earlier, where information, all these elements help reduce cost. And to Michelle's point, folks are willing to pay for it if speed is faster, if information is better, if there's more flexibility, if there's more visibility. So all these things feed into potentially lower costs, but also willingness to pay were these things to be solvable.
Not to mention that you'll make up the dollars in other areas, right? So if you're spending in one area, you're going to see the residuals of the fruits of your labor in others, so they don't mind.
Yeah, it's that total cost of ownership. I really like that argument because the cost of the payment is just one piece of that total cost of ownership. And if you can find those efficiencies, which to Michelle's point, you can, then actually your total cost goes down, even if the cost of the payment component goes up.
I love the nuances that come out when you force people to make a choice and then defend it. It just helps. It helps bring that stuff to light. So thank you for the first speed round. We're gonna skip the remainder of questions there. We're gonna move on to fraud because we all love fraud. We're gonna start with Bob and come towards me and then loop around just to keep your mental acuity up, everybody. So payment security matters mightily. What are the issues and opportunities? I'm gonna bundle a couple questions. So pick either part of them or all of them. And answer. So attacks on smaller firms seem to be growing much faster than they used to be. Why is that? What do we do about that? And then I also want to move to also cover the level of preparedness by payment networks. Across the board, there are lots of payment networks and payment rails. So can you start us off?
The way I'll actually start off is I'm going to go back to a point I made earlier around data. To be resilient against fraud. And whether you're a small firm, whether you're doing payments on a variety of networks, the point is that your payment process is what's being attacked. And if your payment process and your controls are strong and resilient and consistent, and I like the example that Mark gave earlier around inconsistency in controls. I wouldn't say it's not the human element, but it's the controls that broke down in that kind of process. And we see those examples, we hear those stories. Something broke in that process. That process has to be strengthened. There's a lot of data to be managed to be resilient against fraud. And I gave some examples before. You have to be able to have control of that, to be able to understand in an instant, because we're talking about speed of payments at the same time as increasing resilience against fraud. With an instant payment, it's instant in terms of settlement. You have to be able to make those decisions more quickly. The human cannot be doing that. So those processes have to quicken up, and they need more data, more controls, more capabilities brought into that payment process. So that end-to-end journey becomes more complex, but to increase the likelihood that you catch everything before it goes out.
Great. And Ankush, as you pick up the response there, maybe you want to focus on level of preparedness.
Yeah, sure. So I think, our business, my business specifically, focuses very much on the card business. And I think from that standpoint, virtual cards are very much designed to prevent fraud. And all the data you see shows that. And that's why we're seeing such a shift from check to card and check to other means, because every survey you see shows check and debit and wire as significant drivers of fraud versus virtual cards. Also, the networks are very prepared for card-related fraud through franchise rules, through controls on card products. And so I do think from a card standpoint, maybe relative to other ACH type products, the level of preparedness is pretty strong. And I'll just add to the point about sort of the firms. Larger firms have more robust vendor management processes, more stringent controls. What we're seeing with a lot of our mid-market corporates and customers is that even though the economy is looking like it might be soft or softening, at least in the US over the next 12 to 18 months, the investment in technology tools to address fraud is rising. We're seeing a lot of feedback that mid-market small business corporates are looking to invest more in these tools because they're seeing digitization as a trend that's here to stay, ensuring that their systems are prepared for that future trend. So some of the trends that we're seeing.
Yeah, I wanted to pick up on what Bob was saying there. I mean, I think he's entirely right around the processes within the payments. And, certainly we spend a lot of time, enhancing the workflows and the rules that you can embed inside a payment. Who gets to make a payment? What are the thresholds to the payment? Notifications, 4 right principles. All of these things are important aspects to If we can able to control that sort of inside fraud, you probably all remember the case in Malaysia, I think it was, where the treasurer absconded made a payment for $100 million and disappeared. How could that happen? Well, that's entirely an avoidable process. Had you been following or had a rules-based thing that hits those payment thresholds and alerts people to who gets paid and whatnot. And then the other thing is that, very topical today, certainly this year, is around sanctions filtering and OFAC screening, and being able to go and get ahead of the payment before it hits the bank, so that you don't risk account closures and reputational risk and things like that is also important. So kind of work together.
Great. Okay, so I'm gonna jump, and this next question we'll start splitting up. Not everyone answering every question, so we'll begin with Michelle and cover Ankush, and then we'll hit the two in the middle. So which is the bigger issue? There's a couple of these items to think about, and why and how will these issues be solved? And just so you know what we're talking about, the human element and fragmented processes and systems where there's lots of handoffs and steps. And anything else that comes to mind. Is that a big enough question?
I have to break it down into pieces.
Can you solve all the problems?
Let's see if I can put on my solutions consultant hat this morning. But no, I think that has to be broken down, right? Because from a user's perspective, which I've been for 25 years before I became a consultant, when you say fragmented processes, and it's changing. Things are going to have to be fragmented to some extent, right? Everything is not going to flow seamlessly as we want it to, because things are being handled in so many different ways than they were in the manual days. I mean, I'll take layman's terms. If you have your foot is hurt, you're going to go to a foot doctor. If my vendor master is hurt and I'm getting fraud, I want someone to help me with fraud, not with my AP process, not with how I am putting my numbers on the books. So we have to really distinguish where we're going to be most impactful for the mid-markets as far as that type of behavior and fragmented. And be careful because, again, to the human element, these guys have been doing things the same way for 40 to 50 years, and it's worked. You have to come up with something in the technology area to show them immediate value to why they should change their processes. Even if they don't see it, it's our opportunity to educate and get them prepared, as you were saying before, for what technology is bringing. Frauds, they work 24/7 to find new ways to get to these guys. And the masses they got PTSD as far as fraud is concerned. You hit them one time, it's like, ooh. So I think technology has to keep up with that and not really look at it as fragmented, but more of a collaborative. That's what I'll say.
Sounds great. So we'll move on to Swift. We'll start with Mark and then go to Bob, and then we're going to move on to speed round 2. Swift is moving, I would say, from a messaging platform where items are transferred like the telephone game from one person to the next to a network, a payment platform where communication around payments is you're looking at a single board. Everyone can look at the same thing as opposed to handing items across the board. Does this matter? Will APIs replace Swift? And what is the value and power of a network like Swift? Feel free to answer as detailed or as summary as you'd like. Mark, you're up.
I don't think it's going to replace Swift, but I think, Swift has already taken some steps around its GPI process and getting involved in that. I think, and the reason I don't think it's going to replace it, at least anytime soon, is just the adoption globally around APIs in banks anyway, right? So, I would say here to stay for the foreseeable future, with some changes along the way.
So, and then the last part of the question there is, what is the value or the power of a network? Let's say like Swift, or specifically Swift.
With standardizations in messages and formats, and everybody is on the same system. I think that's one of the powers. People are working off the same hymn sheet.
All right, Bob.
The network is the key word here. The viability of Swift. I have no concern about the viability of Swift. They're going to be around for a long time because of the network. You can do a tremendous amount of things when you have that many institutions and corporates as well on a single network. I mean, just what we've known in terms of messaging, the messaging standards are going to change. Swift, like everyone, are looking at different ways to adopt APIs and utilize that to modernize aspects of their architecture. In the end, they have a network of thousands, 13,500 different institutions and corporate members together. That is the thing that matters for them, and their power is immense as a result of it. So I think everyone in Treasury will utilize them to some degree, and will continue to do that for years.
Excellent. So we are going to move off of swiftly and move to speed round 2, but we will begin speed round 2 on Swift, and we're going to reverse it. Start with you, Bob, go to Mark, and then we're going to move on to some other topics besides Swift. So I'm focusing on you two on the Swift order. So again, quick answer, like the real answer, and then a 10-second response. It could be more than 10 seconds, but Swift payments platform, is it a great idea or too little, too late?
Oh, it's not too little, too late. So great payments platform, yes. And there's a tremendous amount of opportunity to modernize payments for everyone, especially, again, Swift, the network.
What he said.
Okay, a lot of disagreement there. So I'll go Mark and then to Bob. So is the Swift payments platform clearly communicated or a well-kept secret?
I'm going to say there's a tremendous amount of opportunity, which is a secret way of saying I don't want to say secret, but I think there's more opportunities to be explored. Again, going back to the value of the network, you can call it a secret if you want to use that word. I would say more opportunities to come.
Yeah, I mean, look, anything is a work in progress when you're making initiatives and things like that. So I think secret's the wrong word. It's just not well advertised, perhaps, or just in its nascent beginnings.
Nascent's the right word. Secret's the wrong word. I get it. Like not disappear, but what was the word you used, Bob?
I think I said it.
Simplicity.
I do like
Yeah, okay, this is good. So we're finding some good nuance here, some good adjectives. This is excellent. So we'll start back with Michelle, and we'll go around to Ankush afterwards. So FedNow, is that will it launch on time?
Pass.
First use of the pass. How about Ankush?
I'll say I hope it launches on time. And I think I'll take Michelle's example of using a real world example to describe this. I think,
you have to do a yes or no.
Okay, yeah, let's say yes. We'll say yes, but if NASA can launch a space shuttle and have everything, it's a critical infrastructure, complex project. If it's set for a date, you have to scrap or delay or move the date. I think we'd all be okay with that given the criticality of the infrastructure. But I'll start with yes.
I want to say yes. I really do. I think, but I like the answer here is that it's very dependent. The requirements matter more than the date.
So is that a no?
That was basically, I think he and I were similar.
I'm still hoping yes.
No.
I'm still hoping yes.
Yeah.
No, but a hoping yes. No with a hoping yes is certainly fine, and then the comments about the other. That's good. So I'm trying to force these out. Nobody's going to get in trouble from our hope. And I think everyone's sharing, most of their views are their personal views, not necessarily of those of the company. So please understand that that's how it comes up. Mark, how about you? Can you straighten this out for us all?
Well, I think like most things, no. Whatever starts on time. So when we come up with, but it's a stake in the sand and an aspirational idea to start something by that date. But expect shift in dates.
I'm going to start with you and go down to Michelle. Again, this is still on FedNow, but this is FedNow or same-day ACH. So FedNow or same-day ACH, which will be dominant? If there's a time frame, right? Same-day ACH is out now. If you believe FedNow is going to dominate, when will that occur? Or do you think same-day ACH will dominate? Go ahead.
Same-day ACH will dominate for the next 4 years.
Next 4 years. Okay, that's pretty specific. I like it. I like it. So 4 years from now in 2026, check and see if Michelle... Check it out. All right. All right. Ankush, you want to go?
Yeah, I'll say same day ACH. Banks have near universal ubiquity with ACH, and FedNow, like we were just talking about, we're all hopeful that it launches on time. So it's hard to see such drastic adoption of something that's so new when we're all hoping that it's an on-time launch. So I'm going to go with same day ACH for now over the next 5 years.
I hear 4 years, I hear 5 years. I like those. I won't put a timestamp on it, but certainly same day ACH for the near future. There will be a shift. I think we all agree that instant payments offered by FedNow definitely will become more interesting, but it's going to take time.
Yeah, I hate to keep saying what he said, but yeah, same day ACH.
All right. Bob, we'll start with you and go the other direction. What do you think is the faster growth by percentage over 3 years? Which will have faster growth over 3 years? Virtual card or ACH?
Oh, that's really easy, actually. Virtual card. Absolutely. I don't see the growth in ACH nearly as much as virtual card. Here at AFP, it's virtual card, virtual card.
Or
sorry?
Is it because it's starting from a lower base or some other reason?
Yeah, it's an evolving opportunity. Every organization has embraced ACH probably to the level that they will. It's not like there's more there. Virtual card, there's a lot that can be done there.
Ankush, I think the answer, we'll expect we know what the answer is from you. Go ahead.
If you watched our webinar last week, Craig, yes, you definitely... No, we'll definitely say virtual card. I think, the data from Nacha shows, ACH is growing 15 to 20%, 21, and probably will sustain that. Virtual card, you look anywhere, it's 25+%, especially in North America. And I think the trends are moving in that direction. We've talked about it here and in the past around fraud trends, like where is there a flight to safety with respect to fraud? It's virtual card, and obviously this push digitization, faster payments on card, all the work you guys have done, Strategic Treasurer, around this, surveying folks on card adoption, shows that folks are getting paid faster. They want to get paid faster. They want to get paid with a virtual card. So we do see that trend persisting. So certainly virtual card over ACH.
All right. What about you, Michelle?
It's definitely going to be V card, virtual card. The only issue or concern I see is how we reconcile. We have to make that clear to the end users. Again, the payment method is changing. The reconciliation process must change with that as well. So that's where it's going to be up to us to educate, but it will be V card.
Perfect. So the next one will start with you. What do you think the faster growth by percentage over 3 years will be, comparing same-day ACH in the U.S. versus faster payments in the U.K.? And I may have a follow-up on this. Go.
Faster payments in the UK, yes, and same day ACH here.
No, I mean as a percentage growth, like I mean obviously faster payments.
I think you're going to see them grow both sequentially. But if I had to pick same day ACH.
Same day ACH. Okay, great. Go ahead, Bob.
It's an interesting one because both will grow well. I'm not confident in this answer, and I really want to come back in 3 years so we can discuss how this played out. But I'm going to go with faster payments in the UK. I think there's something about faster payments that's very interesting, and I feel in a market such as the UK and even parts of Europe, there'll be some very widespread adoption initially.
So I'm going to go with same day ACH. I think faster payments UK, it's quite well penetrated. We've seen data, I think, around 20 to 25% growth in faster payments and closer to 70 to 80% growth in same day ACH. So I'm going to go with that for the next couple of years.
All right. Okay. Excellent. That was the end of speed round 2. So now we're wrapping up our discussion with a future look. Michelle, we'll begin with you coming down this way for the future look. I'd really like to hear what you see or hope or expect in payments over the next 5 to 10 years. So I want to avoid the stuff. It's like slightly more adoption of ACH or V-Card or some cross-border. What's going to be transformative? You can acknowledge good ideas. You can look at what's occurring, what other people say. But what do you think is going to be most transforming over the next 5 to 10 years in payments? What can we look forward to?
Better configuration from the tech companies. Now, let's be clear that our users are more sophisticated, more savvy, looking for more seamlessness and confidence in their tech. So as long as technology continues to grow, I think we're going to see more users taking advantage of V-Card, same-day ACH. But again, there's a lot of bruises that have been happening in the fraud, but in the next 5 years, I see companies really adopting the virtual card process more than anything else.
Okay, excellent. Thank you. Mark.
I just sort of looking forward, and it's happening today, but we're going to see more of this expectation around frictionless processes and automation. All the hard work is done utilizing technology behind the scenes, but as a user, whether I'm in corporate treasury or an AP, that these processes become less and less manual and more reliant on technology to make that easier, and then to call out the exceptions, but more of that pervasively across every industry.
Okay, thanks, Mark. And Bob. Bob is also known as Treasury Bob if you use Twitter, so follow him there.
I'm going to go back to a word I used at the start, simplification. And it's a similar angle to what Mark was speaking about. The end-to-end process that's where the focus is, where the opportunity for improvement is. And so we talked about things like having disaggregation and disparate systems, disparate processes. Smoothing that over will simplify your process and open up the opportunities for new payment types. And there's new payment types. We've talked about all of them. I mean, the adoption of same-day ACH, the adoption of any type of faster payments and more digitized payments requires a process that can take advantage of that. So the processes have to be quicker, they have to be simpler, and they need to be ready to take advantage of the data opportunities, whether it's to protect them or to actually improve things like Michelle made the point about reconciliation. That can be much simpler with the technology tools and the payment rails that are coming for us. So great opportunities, and it's all about finding ways to have efficiency and better process, more automation, and then a lower total cost of ownership.
Great, thank you, Bob. Ankush.
Yeah, the challenge of going last is a lot of it gets covered, but the frictionless simplicity, all of that. So my number one was end-to-end experiences. So I know we can't cover that, so I'll cover my second one. But just to build on that for a moment, it's moving away from buyer-led experiences and supplier-led experiences, AP only, AR only, to a focus on a full end-to-end seamless experience and frictionless experience, digitized experience, where supplier onboarding and enablement is a priority, where banks that have customers that want to adopt new card programs, for example, feel like this is something that they can do because the process is easier, as Michelle's pointing out over and over, that and we see this with all of our customers, that they want a better experience. They're willing to pay for it. If the end-to-end experience is seamless, there's certainly a willingness to adopt. So the different answer I'll give on this one is just resource prioritization is going to be an important priority over the next couple of years. We're seeing 60 to 70% of companies targeted by phishing scams, and we're talking about the human element in all of these processes and needing to ensure that, we solve the technology, we solve the tech to make sure that the human element doesn't come into this. As we see the economy softening, as we see the focus on investing in technology solutions, it's how are resources internally going to be redeployed to take advantage of the next set of big opportunities? How are we going to culturally change and upskill folks in our companies to be API first and not just think about, not just focus on, let's say for virtual card, if you're at a supplier where 90% of virtual card payments are manually key entered. That'll likely not happen in the future if the trends persist the way they're going. So how do we sort of redeploy capital in a way that takes advantage of the digital and technology trends that we're seeing? So I think that shift is going to be pretty significant over the next couple of years, as all the trends we've been talking about, API first, digitization, modernization of payments, becomes top of mind at all these institutions.
Thank you all. A number of great, excellent points, things to look forward to. Ankush from Mastercard, Bob from Kyriba, Mark from Fides, and Michelle from Corpay. Thank you so much for your input, your comments. I know I got a lot smarter today just hearing, especially on the nuances as you guys describe things. That was very helpful. So let's give them a hand.